Hello, traders. This is Michael coming to you from GammaEdge on Wednesday, April 23rd with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at a market trend model that is based on the tick index. You can research that at your favorite investing website. In the short definition, it is a overall buying versus selling in the market. And then we add a time component to it to be able to monitor the overall trend of buying versus selling. We reference our bolded CT here. This is our cumulative tick throughout the intraday. We've added the green arrow, obviously indicating that the cumulative tick did improve yesterday into the afternoon. Moving above these shorter term moving averages that we use for a reference line. This was also met up here with our filtered cumulative tick. This is plus 1,000, minus 1,000 aggregated filtered out block orders of larger institutional players. So again, if it's above the zero line, this is indicating institutions or larger block orders are getting executed in the overall market. So this is a positive sign for the bullish overall case. Again, we'll watch this today. Back the past few days to weeks, we've historically seen the bolded CT come up to our longer term ribbon. Basically, this longer term ribbon is indicating that there's a significant downtrend in the market when the red is below the cyan and sellers are maintaining overall control on a longer term time frame. Previously, when we've reached this colored ribbon, we've seen a quick failure of the bolded CT and back below the moving averages. That was complemented with price depreciation. Most recently, we've seen that on the 17th. We tried to see this cross back to the upside of the bolded CT, and then we were quickly met with failure and increased selling back to the downside. So will this time be different? We're not sure, but we'll continue to watch it and we can monitor it intraday. If the bolded CT continues to the upside and dissects the colored ribbon and then emerges through, we can be moving into a 1 to 3, 5-day possible move to the upside, a little bit longer sustained a shorter term uptrend, and then we'd probably see some overall price consolidation. If we see this move up to the colored ribbon or in the colored ribbon, then we start to see it roll over and cross back below these moving averages very quickly, then we'd be inclined to look to the downside a little bit more and give the bears a little bit benefit of the doubt as we are at the moment until proven guilty. The bulls need to do multiple days of buying and see this bolded CT cross back to the upside. Yesterday was the first day that we actually saw the breadth indicator improve. This is new highs versus new lows. The green is obviously new highs, red is new lows. It did not outperform with a large margin, but it's the first day we've actually seen more stocks being bought than sold in the afternoon. So again, we'd like to see another day of the filtered cumulative tick above zero, moving to the upside, indicating institutional larger players are involved in the market in buying, and then as well as the bolded CT continue to move to the upside, also staying above the colored ribbons. All right, moving on to the SPX-A. Again, these are longer term dated contracts, monthlies. These are larger players within the overall market, most likely institutional positioning. We are still put dominated as we come into today. The structure, again, obviously still put dominated overall. We are seeing some repair below spot price here with the green positive net deltas indicating that some out of the money puts have closed, and we have some in the money calls down here below spot price. Again, this is like the first change of the overall structure that we would like to continue to see in repair and improve. Implied open, we're gapping into that significant negative net delta area overhead, so price appreciation to the upside may be difficult. We'll be monitoring the 52.5450 level as well as the 5,500 to the upside for stalling if we stay above 5,400. If we get below 5,400, then obviously this would bring these puts back into the in the money state, and then most likely we'd see some negative net delta to the downside. 53.50 would be that first area that I watch for some price dampening and possible support area into that overall strike for today. Now moving on to SPXP, obviously these are shorter dated contracts. These turn over much more quickly. These include 0 DTE weekly and monthly expiries. Implied open there indicating 54.20. I'll draw your attention to the largest improvement we've seen in the net OI. This is obviously out of the money call speculation to the upside. And you'll ask, well, why is the net delta not positive? It's because these are in the money puts overhead. in the money puts overhead, obviously controlling the overall structure. We do have call speculation that is starting to improve to the upside, but these are out of the money calls, so their delta is not as large as the in the money puts at the moment of these calls above us. So again, we're gapping into a significant negative net delta territory. To the upside, so price appreciation will most likely be difficult. To the upside, we'll be watching 54.50 and 5,500 to the upside. And as I said, we are still put dominated, obviously, within this overall structure. So we'll watch this upside to see if we see some stalling and resistance levels overhead as we traverse into this large in the money put dominated area overhead. Moving on to the SPX 0DT, we are call dominated heading to today. That's a positive outlook and positive stance, as well as positive gamma. Implied open is up here at 54.20. So again, you'll notice that we are gapping into this overhead in the money put dominated area. But look at the net GEX here. Obviously, this is 0 at the moment because of the large gap. And then noting that the net OI to the upside here is green. So that's indicating that we do see some call speculation coming to the upside. But again, this will be the structure will be extremely thin with this large gap. Noted our key level here is 5,400. We'd like to see price stay above that level. And obviously, if price comes down to that level and holds, this would be a nice area to get long the overall market. As well as long as the MTM, as well as the market trend model, indicates that buyers are still trying to maintain control, as well as our intraday tools, the vol-m command, indicating that call speculation is continuing to the upside. To the upside, we'd be watching 54.50, and we've outlined some other levels here, 54.70. And then obviously 54.25, where we're almost gapping at the open. And then to the upside, 5,500 would be a key level also if we do see price appreciation up into that level. Main takeaway is we're call dominated, so we do see some call in the money calls below us that could dampen price moving back to the downside, but we are in this significant large gap. And basically, the structure will have to continue to repair itself to the upside without the money call speculation to maintain any sort of large price appreciation to the upside. The SPXP delta balance, this is basically just the market positioning, or sorry, options positioning above and below spot price. Before, obviously, we want to see the bolded blue line be moving above the 0, indicating that call speculators are starting to take control of the overall market. We'd like to see the left-hand plane, which is below spot price, stay above 0, indicating in the money calls below us can provide supportive type action. And then we want to see this green line crossing back above 0, indicating that out of the money call speculation is coming into the overall complex also. So as of now, we're not seeing that projected on out in time. This could definitely change today. The other ETFs are showing larger improvement than the SPXP, so we'll move on to those. The Qs, I'm sorry, the SPY delta balance here, obviously looking at the overall structure improvement. All of the planes are above 0, indicating that in the money calls and out of the money call speculation is starting to take control, and the delta balance is at 1, which is what you want to see if you're a bull, and that this overall structure and sentiment continues to improve and stay above this 0 line. Moving on to the Qs, again, we talked about yesterday that we saw some improvement on the SPY and QQQ, but this needed to be maintained. Was this just a one-day flash in the pan, or are we going to see a move to the upside? So now, obviously, we're staying above 0. All the planes are above 0, indicating call speculation in the money calls below us, and now the money calls above us are starting to come into the structure. Obviously, this will help with dampened volatility, and then pullbacks will be easier to get involved in within the overall price action. So again, we want to see this delta balance maintain at 1. Indicating call speculators are in control. GEX ratio for the SPXP, we talked about how we saw these price appreciations without a improvement in the GEX ratio, indicating that the short-dated put gamma was still in control, and the short-dated call gamma was not basically moving or taking control of the overall structure. Again, price appreciation today, and now we see this red line moving to the upside, indicating that the short-dated call gamma could be improving, and we want to get above that 1 and stay above that 1, as we've previously seen over here. When price holds these significant levels, you see the GEX ratio stay above the 1, here, and then we just see those normal rotations of out of the money calls, in the money puts, and then you just continue the overall rotation back and forth. Moving on to the SPXP net stat command for today. We've forced spot price at 54.21, which might be where our projected open is. Basically, this is just indicating and letting you know where the highest sensitivity strikes are above and below spot price. Obviously, 5400 to the downside, 5360. That's why I discussed that 5350. We have a large amount of in the money calls sitting there within the overall structure and complex. So any pullback into that into those strikes with a market trend model that is showing buying, as well as our volume command intraday indicating that call speculators are still speculating to the upside, would be an opportunity to get involved. And then 5400 needs to hold, obviously, on any pullback to the upside. This 5700 is way above where we're at strike price-wise or implied open. This is just the next highest sensitivity level. And then we see 5450, 5425, and 5450 Charm, Gamma, and Vanna that we went over. Those obviously would be areas to the upside where we'd look for some sort of stalling. Obviously, make sure that net delta is a first order Greek and it overrides all the second and third order Greeks. So we'll continue to watch the mechanical opening and closing of contracts to override all the second and third order Greeks. Moving on to the trading view chart. Obviously, large gap up this morning. The first area that I'd be looking to hold is 5400, and then to the upside, I'm watching this 5425, 5430 that we already referenced, and then 5450 to the upside would be the next level. I'd look for some sort of stalling. So pre-market, this local high would be your first kind of area that needs to get above if the bulls want to maintain control and move to the upside. I've placed VWAP on here, but this will be more important intraday. We saw multiple opportunities and pullbacks to VWAP yesterday. We did undercut one time, but those give you the highest risk reward when VWAP matches our key strikes and key gamma delta levels on pullbacks, and that's where our highest risk reward is, and we'd like to get involved in the overall structure and market. So we'll continue to watch this today. Obviously, significant gap up here, 53.50. If we get below that, get below that level, I did probably most likely see some more selling to the downside and possibly filling this gap down towards the 5300 level that we had spoke about multiple times yesterday. So again, a large gap up. Takeaway for today is be patient. We're gapping into an in-the-money put-dominated structure overhead that's going to be very thin. 5400 is going to be a key level to maintain. If we get below 5400, we could see some quick selling back to the downside. This would most likely just be short-term profit taking from in-the-money call holders that are getting rewarded for the risk overnight. And then we watch that 5350 to 5370 level to be some sort of supportive area. Again, if that's not, then we get below that, then I'd most likely look for some more weakness to the downside, possibly towards this 5300 level. So that's kind of the game plan for today. It'll be hard to go long at the open unless we see really some compelling setup, as we're gapping into the in-the-money put area overhead, and we really have no edge to the upside. So I'd wait for at least 30 minutes, wait for the opening book to clear, establish a clear opening range, and give you some edge for clear setups that might be possible to get involved in the overall market. So that's it, everybody. Thanks for joining us this morning, and make it a great day.